Good morning. It's 5:41 a.m. Pacific Standard Time. Today's date is 6/1/2011. We've gathered here this morning to take a look at the futures market. Today being June 1 of year 2011 is that when we were watching the Memorial Day week, holiday week, learning how to trade holidays. Next one's going to be 4th of July, and you'll learn how to trade that because you've seen what the Memorial one was about. And we're going to talk about that last 3-day period. We called a top in the market in the month of May. Before May started, we said that there would be a bull rally correction or bull rally pullback, that it was around the corner. And that was in April. And that was before the market would have to pull itself in. And it's all about irrational exuberance and pessimisticness and everything that markets are made on. Bull mentality, bear mentality, doesn't matter. What we are here to do is sort out the realities and then understand how to make those entries and exits. Okay? So we're going to talk about on the opening this morning on June 1. That you only have 2 stocks that meet our criteria. Now, on the last day of the month, on 5/31 of 2011, you've seen quite the difference. Because if you want to go take a look at yesterday's pre-market analysis in the futures market, and you want to compare it, as you should, new MMTs, so that from day to day, you have a good, solid foundation of price action volatility. And price action volatility is here, as I said 2 months ago. This volatility has pockets where it increases, which is it's ascending, expanding price action volatility. The SMF platform will tell us for one reason. Because in our platform, if we have delta expansion, beta delta expansion in our platform, then that tells us right there that price volatility is in an escalating fashion, which means that support levels and gap levels and resistance levels are going to act in a different way. What it really means is pulling that public emotion into this tape, into that buy and sell transaction, pulling the broader public emotion in all categories of the Wall Street tape. All categories, rather institutional power investors, institutional quote tier 1, 2, and 3 level traders, hedge fund managers community, and then of course everyone else below those groups, financial advisory services, mutual fund managers, all alike, are going to start making opinions, and their opinions equal a certain tape that will occur from day to day. You'll see the similarities though. However, and excuse me, I have a cold here. So, however though, is what we look for is expanding gaps or diminishing gaps. And for the new MMTs, you have to have a 1.00 ratio, either greater than and or less than. So to meet the qualifier, we have 3. Go back and take a look at yesterday's gap open, pump and dump, the last day of the month. Pump and dump, it's called portfolio dressing. People were coming in, buying down beaten areas with their bull overbought reversals, such as energy, oil, commodity-related names, copper, gold, silver, off the bottoms. That's what happened that last week. And every reversal trend has a depth to it, or the length of a reversal. And so basically part of these reversals that you're going to learn, I'm not going to go through them here on the tape, is going to be understanding this pre-market futures trade. And you've got 2 stocks on the gap open. Now let's take a look at the gap open down. Ooh, nice. Look at here. JOSB. Look at that Netflix. Again, had an upgrade today, but stock is gapping down. Google is gapping down. So this is the gap down list. It's not a huge expanding list, but nonetheless, it is greater than the gap open up list. So it really doesn't matter how many stocks it is. It still has that weighting. And when these lists expand, like they did in the month of May in pre-market futures, there was a few times there where this list was long. Oh boy, was it ever. So Amazon, the bull, the TQQ is down. What has happened today is that the ADP number has come out. And that's the employment number. And there is a breakdown, and I'm not going to go into that in this video. However, we will be talking about it with the MMT group as far as the SMF fundamental section goes. Right now, trade management is that we will take a look at what some of the news is on this JOSB down 7.5. We will take a look to see where the bull ends on the lower end of the price level, so that bull comes down. And the other one that you're going to want to be watching is that SQQQ. That's that bear. And when you're looking at that bull and that bear trade together at the very same time, it's going to give you an equilibrium of where that strength is in the tape. Is it more to the sell side, or is it more to the buy action off of those? And or are they consolidating at the higher price levels, or are they consolidating at the lower price levels? And what does that mean? Well, we'll talk about that as we go through the live trading day. So these are some of the common things that new MMTs are going to want to look at, and they're going to want to look at them consistently every day. And they're going to want to make that part of a protocol. Because when you have the right protocol as the gap open up and gap open down and where the futures are and where the sentiment is, and most importantly, what was the key economic data that's driven that gap. And then again, it's every MMT's responsibility to go to the news wire and look up and see what the news is. Netflix, will look at where that one hits the bottom and how you get those knife hook buys if they're there. So off of that support level on Netflix, we'll look at getting that long. However, we'll take the move if it's a 369 breakout and that's all you get. Well, then that's all you get. If it's one of those 3, 6, 9, 12, 15 breakouts to the top, well, then that's what you get. And by understanding the buyer and the seller and the institutional people involved in the middle and the market makers and everything else that go in the tape, you'll be able to know exactly what happens and what crowd drives what. So the gap open is bigger. The gap open up, not too many, 3. So the weighting is already imbalanced. TLBT and MMT needs to go find out what the news is there. This GLNG, get the news. It's a 1.80 gap open. Okay, DAKT, you need to know what happened there. Everyone needs to know what happens with these gap opens and what drove them there. Okay. Their artificial price opening bell from the previous day's closing bell. So it's not like the stock market hasn't even opened yet. We need to know what is driving that artificial price print on the opening bell. But most importantly is, what do we do with it? And why do we do what we do? And one thing about the wonderful part of learning this is that those things will make a high and they will have their pullback. Most people's patience levels or disciplinary levels that they have just don't quite hang in there until those times happen, but they will happen. And the thing about it is that when you're making a market between the public, they're the one in control. You're just going to go either short, where the bull would fail, or you're going to go long, where the bear would fail. So it really doesn't matter other than sizing that up on the gap open up and or gap open downs, and understanding that there is a trade technical aspect to it. There's a public model, and then there's the market maker model. And that's the model that you deal with. So we will peek on these names if they're really good news on them and they pull back, so they make their high, and then they get a 3, 6, 9, 12 down, or they consolidate for a period of time before they break down to a lower level, is that they would bounce immediately right at those market maker price action support lines, and you would get net long. So by understanding strength and price action, it gives you the opportunity to get in at that key price action support level in your MMT platform. Gap open, gap down, news driven related. June is a weak month. And we have updated all of the indexes and indices in bull rallies. Bull rallies have to have pullbacks at times. And you need to know what is the driver, the key headlines, the key things going on around the world, internationally and U.S. combined, so that you will know where the bull starts to change their thinking. They thought they were going to get 4% GDP growth. We said the middle of the year, and we went through this in 2010, except we're in a much better bull rally than we were in 2010, because we are. And in 2010, there was a soft patch of slowdown, and what saved the bell in that inning was QE2 by Uncle Benny there. And we propped the market to the all-time 2011 highs, and that was a contributing factor of those monthly charts that we cover so in depth, is that you can clearly see when QE2 came in, you'll clearly see on those monthly charts where those breakouts started happening back in at the end of, what was it? We were short 3 weeks, August 2010. Go look it up on the live videos. Do a search on the stock market funding site, you'll see. But we said it was time to get out because we had some big rallies after that QE2 at the end of that pullback and that soft patch in the economy that we had about the same time last year, is that we do have a soft patch in the economy right now. And we're at overbought levels that we consider overbought extreme bull levels. And when extreme overbought bull levels come into play, they must come back. They got to pull back. And the news right now, with the big unemployment number coming out Friday and things showing weaknesses across the board this morning, and the economic data that played out last week, as we said, why don't you just start with the PMI and durable good orders, okay? Why don't you start with the ISM today and the ADP report? I would, what about the housing one? These are all things that start to change people's opinions, and we'll monitor them carefully, just like monitoring the immune system, so we know where that immune system is losing strength or gaining strength. And that's going to be that public opinion, and that's what we're here to do. What we're here to do is make a market in the middle, because it's going to be their public emotion that you're involved with. And so that's the sentiment. That's the gap open up list. The reason why we're going longer in pre-market on the Nasdaq comp is because technology had led the way down in the February reversal that we said we were overbought, bull rally overbought condition then. And it's clearly right there on the website if you want to go back into February. Technology being the one that led that way down. And then we bounced. And we had a counter rally. And we had some window dressing and Memorial holiday week. And the last day of the month yesterday, when you look at the gap open up and the gap open down, they were quite different than today. So pay attention to the gap open. Pay attention to the gap open down. FFIV has gotten logged on the calendar. FFIV. Okay? So it's always important to understand what piece of news may be tied to the name.